is an underwriter and what do they do in the equity markets as well as in the bond markets? Let's understand more. I'm your learning partner Sushila Hariharan, and if you're interested in a career in investment banking, global markets, hedge funds, do subscribe to my YouTube channel where we provide content centric videos on topics relating to these subject matter so that you gain expertise in these fields to crack the interview at a global investment bank or a hedge fund. So let's understand the concept of capital raising in order for us to understand the role of an underwriter. Mostly companies, when they want to raise capital, they choose between two different options, that is debt or equity. Within debt, they have a variety of structures, a variety of maturities, a variety of coupon preferences, etc. And that itself is a very large activity. This often takes place in what is called as a debt placement or a bond placement activity. Sometimes these bonds are offered to the general public, and sometimes these bonds are placed within a closed syndicate of investors. So, over here, when the company is looking to raise debt via bonds, okay, then there is a possibility that the company might not get all the money that it had wanted to. So, how does a company decide whether it wants to raise capital by way of debt or equity? This totally depends upon multiple factors, but two overarching factors are the debt equity structure, which highlights the leverage of the existing capital structure of the company, and second is what is the promoter's intention to dilute the ownership of the company. But let's get back to what is understanding the role of the underwriters. So, when a company wants to raise capital by way of a bond placement, either with the general public or as a private placement with a syndicate of lenders, then it appoints what is called as an underwriter. The main job of the underwriter is to market the bonds in such a way that it gets fully subscribed, and in case it doesn't get subscribed to fully, then the underwriter picks up the unsubscribed portion of the bonds. Let's say, for example, a company is planning to issue bonds worth $800 million, and the syndicate of investors has decided to invest, but the amount that is raised through this activity is about $700 million. That leaves a yawning gap of about $100 million for the company. It still needs that money because it has to place that capital, it has to use that capital for various production, manufacturing, distribution activities, and therefore it needs that capital. At this point of time, the underwriter's role comes into place so that the underwriter is then gives in and participates in the remaining 100 million bond placement. So underwriters are many a times also doing investment banking activities like I explained over here. They also do underwriting. So many investment banks in the world offer investment banking, they offer lead management services as well as underwriting services. And the concept of underwriting is very peculiar to the financial markets because it involves a guarantee of subscription to the issuer. This is very comforting for the issuer because the issuer is then able to collect all the capital that they wanted to. If, on the other hand, the issuer had wanted to raise 800 million by way of bonds and it had received 900 million subscription, then it doesn't need the services of the underwriter. The underwriter only gets to participate in what is called as the underwriting commission that has been paid to him at the time of appointing him as an underwriter. So this is the great success for both the issuer and the underwriter that the bond issuance was fully subscribed to. So the role of the underwriter in contributing to the capital of the company is not there over here. A similar such things takes place even in the equity markets. In the equity markets, what happens is when a company is raising a capital by way of an IPO, that's an initial public offering, then it offers its shares to the general public at large. But by the time the IPO hits the markets, perhaps the market sentiment has decreased dramatically and the trend is more towards bearishness than bullishness. Then we find that the company is not able to collect all the capital that it had wanted to collect at the time of the IPO. In such a case, the underwriter's role comes in again over here, wherein the underwriter purchases or subscribes to the remaining unsubscribed portion of the capital. So, three questions that pop up here. What is the role of the underwriter? The role of the underwriter is to guarantee full subscription of the capital for the capital raising activity, either by way of bonds or by way of equities. Second, when does the underwriter have to participate? The underwriter has to participate in the capital subscription only if there is an under subscription of the issuance. If there is an oversubscription of the issuance, there is no need for the underwriter's capital contribution. And third, can the underwriter participate if there is no need for the underwriting subscription? No, not really. There would be no need for him to participate in the capital raising activity if all the capital is collected by the issuer at the time of issuance. Is underwriting popular amongst investment bankers? Yes, it is very popular amongst investment bankers. The best story or the most successful story is that of Infosys, who had seen a complete IPO done when they had to raise money by way of capital, by way of an equity subscription. They found that they could not get full subscription to their IPO sometime in 1993, and the underwriter's position came in and they had to pick up the remaining 4% of the subscription of the IPO. This means that the underwriter's role is very useful in the case of bond as well as equity markets. In the case of debt and in the case of insurance, underwriting assumes a little more complicated roles. Okay, for example, in the case of insurance, underwriting is an activity for evaluation of the insurance policy, and in the case of debt, underwriting is a process which also determines the credit worthiness of the issuer. But that is underwriting and not so much as underwriter. Okay, so underwriting is a very important role in the bond markets, where they have to assess the credit worthiness of the issuer as well as assess the credit profile of the issuer of the bonds. So underwriting is a very unique feature wherein companies which want to raise capital, right, and they want to raise money, they are guaranteed that they will be able to raise the money. Of course, every country has its own regulations regarding how much can the underwriter contribute. For example, in India, the regulation is very clear that if the company wants to raise X amount of money by an IPO in the equity markets, then if they have not received 90% of that from the general public and other investors, then the IPO is cancelled, it is called off, right? This is a very important part, because otherwise the underwriter can not contribute. Let's say it's received only 60%. The underwriter cannot contribute 40% of the capital, because that would make him then a qualified institutional buyer. So underwriting is only for that last mile kind of contribution at the time of, literally on the last day of the subscription, when they find that the capital has not been fully subscribed to. If you like the content, do like, comment, share with your friends who are also interested in investment banking and hedge funds, so that they gain knowledge just like you have. Thank you so much.